Hello, everybody. Welcome to today's Monday market update. Um, this is I'm actually really excited. Finally, we're getting to a point where we're hitting some high time frame levels that I was really interested in, right? So we'll go ahead and take a look at some charts here and look to see, what trades we can take in this upcoming week, especially with the volatility to be expected. So if we take a look at our schedule here. Go ahead and refresh this. So we have the US DC Blockchain Summit tomorrow, and then Wednesday, the FOMC. And the market right now, as far as I'm aware, is pricing in a 25 basis points rate hike. Okay, so if we were to get something, let's say a pause or higher than that, the market will react, I think, very strongly. And nonetheless, I do think that we're going to see quite a bit of volatility out of that. So, wow. Sorry, I'm just in some trades right now, so I want to be sure. I should probably just go ahead and set my. Let me just make a quick adjustment on one of my stop losses quick, just so I can stream in peace. Can stream in peace and not have to worry about it. Okay, perfect. We're all set. Okay, so let's zoom out here. First of all, I want to look at a weekly chart. So if you guys recall, I've been pointing this area out quite a bit on the chart here. And that's this sort of zone, right, of all of these moving averages converging on each other here. And, one thing, if we go ahead and zoom, well, let me see if I just have this drawn on here. Okay. So this is our sideways channel, right? We rejected from here. The bottom held, we had our deviation, rejected again from the high, held the midline as well as the 21-week moving average, and then had a massive bounce, a massive weekly close, right? And basically what I said was, if you guys remember, when we rejected from here and we were trading down here and we started to get a move up, I said the next time that we get to this point, price is not going to stop. I very much expect for a push through, and we got exactly that, right? And if, as we look at the chart here, we can see that really, the next key area of resistance, would be, at basically this untapped weekly level here, right? As we look at the weekly chart. And we can, kind of infer if we go ahead and take, kind of go ahead and draw this over. You can see that this is sort of a possible resistance zone, right? So previous support. Am I all the way out? Yeah, okay, cool. As we can see here, previous support here, previous support, failed to hold support, gotten to move down, and now we're basically just back testing support here, right? So on this move, I'm not saying that it's exactly right here, but I do think that this is a really nice zone for some degree of our retracement. One thing I do want to say is that the 200-week moving average is at 25,450 or so. Most would expect in this case for a back test, let's say a wick down to that level, holding a support, and then, having continuation to the upside, having some candles that sort of look like this. I think that this move is really, 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 really expected. I'm not really, to be totally honest with you, I'm not so much a fan of that idea. I mean, look how painfully obvious this is, right? We have, even if we take off the 200-week moving average that is at this point in my eyes like a meme, everyone knows about it. Had resistance here twice. What would be the logical thing to do would be to back test, flip support, have continuation. Well, similarly, right, to this move down here, everybody and their sister were waiting for a move down to the bottom of the channel so that they could get along. Well, I don't think that that's going to happen. I would think it would be more likely, in that 200-week moving average is around here. I think it would be more likely that we either don't really get much of a back test, right? Maybe hold some higher level and have continuation. Or if we do have that back test, that we're going to drop through. We'll actually go lower than expected, which would get a lot of people very bearish, and very concerned, with price action, and then from there to, have continuation to the upside. So again, let's zoom in a little bit. We're going to take a look at this chart here. For now, I'm just going to get the moving averages off so it's not as messy. So, we did trade inside this range for quite some time. It was really, really nice. I mean, that was from, mid-January to mid-March, really. So, 3 months of price action, multiple touches at the top, bottom, deviation, midline, well respected, rejection from the top, broke through. Now we are, having consistent daily closures above. Similarly as that we had below here, I wouldn't be too surprised if similar to here we have a deviation, similar to here we have a deviation, and we can see that the midline falls at about 25K or so, a little bit, yeah, around 25K depending on when it's hit, which is also the 200-week moving average. And the top of the sideways channel, you can see I have here 1, 2, 3, 4, 5. This is that sideways channel broken up into quarters. So you can see that having that kind of coincide in this area here with the top of the previous channel, the 200-week moving average, would be very much the first place that a lot of people would be looking, right? If we draw this out, we have our 1, 2. Well, let's just go ahead and do it. We have our 1, 2, 3, 4. We have then an A, B, C, and then I'm actually going to change the degree here. We're going to go down. Oops. A, B, C, and then we're going to do a larger. 1, 2, 3, 4, 5. Change the settings on here. Where are we at? Minor. Yeah, that's fine. Okay, so you can see we had our 1, 2, 3, 4, 5, our ABC, and now we're looking to have something of an extension. I'm actually just going to hide these two now to clean up the chart just a tad. Basically, 1, 2. This was a great 2, by the way. 3, 4, and then 5. So whether or not 3 is in yet is to be seen, and we'll talk a little bit about that. But right now, understand that 3 is the longest and strongest wave, typically. So if that is the case, I actually don't think that 3 is going to be put in here. I think we're going to have some kind of a mess, and then we'll see something like this, and 4 will probably be So just a couple things I want to talk about with that, right? So 3 is usually the strongest and the longest. If it's not the longest, it's at least not the shortest. Okay, so right now it's already very, very short. It's really only 1, 2, 3. What is this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10 days. I mean, not even 2 weeks. Yeah, so am I gonna think that all of a sudden, like, oh, wave 3 is in, we're gonna have a massive retracement? Personally, no. By the way, as we do this analysis, um, let's sorry, I'm just reading the comment there. Let's totally forget about the fact that it's FOMC for a minute. Let's forget about the whole global whatever, all the collab, the banking collab, whatever. Let's forget about that. Let's do some technical analysis for a minute. Okay, so if we go ahead and take our fib time and we look at, let's say this is, one, no. Let's say that this is 1 and 3 started here. So if you would expect 3 to be longer than 1, you would expect wave 3 to kind of close out, around June, after June, or at the very least, if it's not the shortest, right? So we'll kind of have to take that by step. It does seem a little too extended for me. So 1, 2, 3. When you have a very aggressive and fast wave 2, you can typically expect more of a sideways wave 4, a shallow and sideways wave 4. I wonder if we can break down 4, 5. I don't really like that. Here's what I can tell you. From what I'm seeing here, whatever pullback we do get, I don't think it's going to be overly severe. And I do think that it will still be a part of our wave 3 that will eventually sideways out a wave 4 for a wave 5, and then probably get like a move back down like this. Let's take a look at one of my other charts here that I've actually already done a little bit of this analysis with some price targets as well. But what I can tell you is that this was too fast for me to think that all of a sudden we're just going to have a massive retracement. Do I think we'll get a retracement? Sure. Yeah, and we can zoom in. We'll look at the reasons why, but this doesn't look great. I mean, here's the deal. Like on a weekly time frame, this looks awesome, right? This is a great weekly close. This is really strong. We could expect continuation, but we are at some degree of a resistance zone, right? We are in some degree of a resistance zone, and for reasons that we'll talk about, I would expect some kind of a pullback here, but I still think that it's a part of the wave 3, so I don't think it's going to be like a massive pullback. So this is let's put on, I'm just curious, let's put on our, yeah, so that's all the way down here still yet. Okay. Our 4-hour, okay, the 21, the 51, we have a lot of confluence down in here. I do like that zone. I do really like that zone. Gosh, I will tell you, if you really want to get crazy here and blow some stuff out of the water, let's theoretically, let's go like this. We'll do one of my favorite tools, fib extension. Let's see where the 1618 and the 1272. We're just shy. I wonder where we are actually. Let's just look for a moment. 886 maybe. Okay, so yeah, we are rejecting from the 886 extension, but I don't think that that's... If this were a 1, we're going to have a 2. What the fuck? Here we go. So 1, 2. Let's do another retracement, fib extension. Here to here, down to, let's say it retraces to 5. And we would look for a 3 extension, the 1272 and the 1618. Oof. Oh boy. Okay, so let's just say if this were so actually here's the deal. If this comes through, we could actually have a large retracement, which would be actually insanely bullish. It would be more bullish in my opinion if we didn't have a large retracement. So here's my thinking. We have a 1, 2, 3, 4, 5. Great. Wave 3, strongest, longest. Let's go ahead and I'm going to put this trend tool on. So let's say we're back over here and then something like this. Take this out. And we're looking at, let's say, a retracement. 1, 2. 3, 4, 5, and then back down here. Something loosely like that. Right? So, you know, breaking this down, right? You have your 1, 2, 3, 4, 5. Then you'd have a 1, 2, 3, 4, 5, which is 3, right? If we were to go like this. Right? And then you'd have your A, B, C, whatever. And then another 1, 2, 3, 4, 5 that would be smaller, give us bearish divergence here. And then basically, you know, breakdown. Right? Back to, you know, the bottom of this channel or somewhere, you know, basically back inside this channel, you know, wherever, somewhere in here. I mean, it doesn't have to be 18K. I mean, here's the deal. When we're talking about this, we're looking at, I mean, looking half a year ahead. And when the question was, why do you think we're going to go back to 18K? I mean, there's no reason to, I'm not going to say, yeah, we're for sure going to go back there, but I do think that we will revisit this level, you know, around 25 or, you know, 22 or 18. I don't think that this is the bull market, guys. Banks don't fail in a bull market. Okay. So like, let's if we go ahead and look at, you know, this chart here and we zoom, oh, you know what? Let me do this instead. Let's just go back over here. If we go over here and zoom out, we're not here. We're not here. We're here, right? And what happened after that? We got a move down, you know, significantly. Right? Now, granted, let's take into consideration the fact that you know, the entire world shut down here and we had, you know, a major black swan event. Let's take that into consideration. But even still, like, let's look at where we wound up, right? If we go ahead and zoom in here and draw a line right over, you know, you can basically see that we came back to right above where the deviation was. You know, ignore this. Let's not even think about this. But look, we came back to right around where that deviation was, right? Well, if we go here and ask ourselves, well, if we put in some kind of a high, let's say like in here, and we're going to go back to, you know, where our, let's say our deviation was, you know, our range low, essentially, right? The low where we found support so many times. If we come back to that, you know, it's in here. And listen, that doesn't have to happen. I mean, coming back to this zone would be great. I mean, even here or, you know, here, or so, you know, I wouldn't be surprised if it was one of these. I'm not saying we have to go all the way back to 18K per se, but the idea is this: we are not doing this right now. We are not doing this right now. We're doing this. That's what we're doing, right? If we're doing that, this is still a bear market. We can still expect, you know, more sideways, you know, down consolidation before then, you know, getting some massive, you know, continuation to the upside, say in late 2024, say 2025, something like that, you know, where we can actually look for a much larger move up, right? I think people get really disillusioned now, especially with this $1 million target and everyone talking about all this shit on crypto Twitter that is driving me crazy right now. You know, I just I don't think that we're gonna be making new all-time highs this year. I just don't. I listen. I mean, here's the thing: if we can get like above this price zone and hold it as support, I will consider the fact that we could be taking this out. I will very strongly consider it. Absolutely. But right now, I don't think that we're going to be really breaking above here for now, just based on my analysis. And that's always subject to change, as you guys know. I mean, when you do high time frame analysis like this, it's guidelines, right? So that I can trade during the day throughout my weeks and I can make some money. Am I going to hold myself? Am I going to say this is absolute? This is 100%. When we get up here, you know, this is for sure it. This is going to be the short, or this we are for sure going to climb up this high. No, not at all. But like if we, you know, do some analysis and kind of put our heads together here and really look at this, it sure does seem this sure does seem like a nice idea, right? I personally, when I first drew out my analysis, I didn't really think that we would go this high. And I can show you guys that here. Let's go ahead and my Elliott wave. Go on to a daily time frame. This is my real chart. If we do, you know, I was expecting something more like, I guess I was pretty close. But I was expecting something more like this. And we far exceeded that expectation so far, right? So if we go ahead and unlock this and put it here now, that obviously changes our targets for a retracement on our wave 2, which I initially had drawn out to here. We can edit that and draw it up to about here. We could say this would be a good place for a bounce, which is around the 200-week moving average, the top of the previous range, the 0.5. It's where a lot of people are going to be watching, which I'm not really a huge fan of. And then we will have to redraw our wave 3 extension. Or actually, we don't have to redraw it, but I am going to put some new targets. I don't think that we're going to stop at the 1-to-1. I think it would be more likely that we would stop at the 1-272 for then a retracement. And then this would, you know, obviously go a little bit higher. So, you know, it's reevaluated. Okay, like I said initially, I didn't think that we would probably get that high, and now, that's obviously changed because we had this impulse. The start to this impulse was a lot stronger. So now I'd like to see some kind of a retracement, right? Whether it's more sideways or it's very swift and quick down. But I would like to see some degree of a retracement. I don't know if that's going to happen at this very second. Like this is for sure the high. All of a sudden we're going to do this. But I do think that some larger retracement is looming to then go higher. That's my opinion. Let's go ahead and highlight all this, and let's actually zoom in now and talk a little bit about, why I think that a retracement is looming. Let's go ahead and hide this for now. Pull up on a 4-hour here. We can see that we do have bearish divergence here to here to again here and then again here. So we have compiling bearish divergence on the RSI. Not the end of the world. As you can see, price is pumped through bearish divergence multiple times, but it is starting to stack up. Additionally, we do have some degree of a, not some degree, we do have a wedge forming here. I'm going to go ahead and draw this out a little bit differently. Here we go. Okay, so we can see that we do have a wedge forming. It's a little bit more clear on the 1-hour time frame. So between the wedge forming, the compiling bearish divergence, and the fact that we are generally speaking at some degree of resistance, let me go ahead and I also do like that line. Okay. So as I pointed out quite some time ago, we go ahead and draw our fixed range volume at this previous range here. We can see that the value area low is set at about 28,726. And price is, for all things concerned, basically there. Okay, it's basically there. Not only that, but the CME gap is basically filled. Okay, so we did fill this gap from back here. We are, virtually, is this the one that I usually use? Yes, it is. We are virtually at, this first larger point of resistance that I've been talking about. And we are there on bearish divergence on top of bearish divergence. And, what did we see happen here? We basically, got this move, retracement, we got our move, retracement, or move. And here, what did we do? We swept the high and are now and still rejecting. Okay. And the thing that we can do is put on our fixed range volume pole. We'll go down to a 30-minute time frame. We can see that the value area low is holding a support. The point of control is acting as resistance now. A breakdown here. Really what I'm looking for, let's see, what we can be looking for is for price to break down, back test this zone for then our move down, which our primary target on this wedge would be the 0.5 here at about 26,250, depending on the charts that you're looking at, right? If you're looking at a USDT pair BTC chart, that price will be probably about $100 higher. Mind you, this is also right around where that point of control was, where we kind of had some resistance and SR flip, you can see. So that would be my first target. And then I think sort of as a final target, again, being this, is our EU Elliott wave? Let's go here. Wave 2. Let's put on our 382 just for shits, but typically I wouldn't expect that. You know, basically our, yeah, I wouldn't even do that. First target here, final target kind of in this zone here, right? I would at the very most kind of look for maybe a sweep. We do have a nice fair value gap here, see it hold as support, and then to have continuation to the upside, right? But of course, taking it one step at a time. I'm not going to sit here and say, yeah, you know, we're just basically going to go straight down to here. Is that on the table? Sure. The analysis suggests that that could happen. But for now, I definitely, you know, just looking at this wedge, looking at this divergence as we near this first sort of major zone of resistance, you know, looking for basically to drop out kind of a back test, you know, enter shorts in this position here, and then, you know, look to just basically trade to this point and then, you know, holding runners for a possible move lower, right? And now, you know, would it be that easy? Could it, you know, price could kind of get here, come up to here, and then come down to here? I mean, that's totally on the table, right? So that's why it's important to take profit. And we can look for some of these things along the way and see if maybe we can get another trade out of it, you know, sometime as we're moving forward. But generally speaking, you know, this would be what I'm looking for this week, and kind of what I'm paying closest attention to at this time. And then, you know, of course, the next area, key area of resistance, if price were to pump straight through here, would be our untapped weekly, as we pointed out here. But again, I personally don't. I really don't think that that's going to happen. And I can talk a little bit more as to why, but first I just want to see. Looks like we had some questions here. Do you maybe think that wave 5 could end up at the fib for the whole bear market move down? I think it's at 48K. Everyone calls bull market, then large retracement back down. Yeah, I mean, Bilbo, yeah, absolutely. I mean, listen, anything's on the table here. You know, he's basically saying, could we do a retracement from here to this zone? Yeah, absolutely, for sure. We could come up here and sweep this high, right? Knock that out, and then, you know, get a move back down for sure. No, that's totally, that could happen. That absolutely, that could happen for sure. And you know, but the reason why am I saying, you know, that 35 mark first is basically because it was a really key monthly point of support here for quite some time, right? We could see support, finally broken through, never back tested it, right? And then on top of that, like I said before, we have these. Did I have them up here? I don't know if I drew them. Well, here. We have these wave 3 fib retracements. I'm sorry, hang on. We have this, you know, wave 3 extension that I basically put on here. Oops. And, you know, where would you expect your wave 3 to extend over wave 1? So this is 1, 2, 3. You'd be looking at, you know, basically the 1-to-1, the 1-2-7-2, the 1-6-1-8 would be among the first 3 places that I would look for wave 3 to complete. Okay. And we have this nice high here that we can sweep, right? For me, I don't like to think too far ahead until I've really been given reason to think that. Okay, so right now, we're in the process of putting in some degree of a wave three. When and if we get into this sort of zone here, if price doesn't reject and we come through like this and get a move up, well, that was not what I was expecting to happen. And then, now all of a sudden I can reevaluate and say, hey, look, I do know that the 618 here is at a really, really nice spot. And not only that, there's a whole hell of a lot of liquidity at this marker. Maybe it's time to reevaluate my targets and start looking a little bit higher. Absolutely. That's very much on the table, and we can take a look if we go to, let's just this is another thing I wanted to look at today with you guys. If we go to our heat map and let's look back, say like 2 years on Binance, we can see that the majority of liquidity, really it is in this upper area, right? We also have a huge chunk at where 35K, right? But there is a lot up here too. Let's look back just a year. 35K, right, is the highest mark outside of course, 15K. So they're both really important levels, but I never like to, I like to look at the first area first. You know what I mean? I see resistance where we're at. I see resistance at the 35 marker. It makes sense with my analysis. For now, I think that that's a great place to start. If price were to, blow past it and invalidate my analysis, then of course we can look higher. But I don't want to look at 48 and have price get to, between 30 and 35 and then have me say, oh, this is definitely not the high. We're for sure going to go higher. I don't want to blind myself by being overly bullish and thinking that we're going to go, so much higher, right? For me, I would rather start with what's right in front of me, what's closest, and then reevaluate along the way. Okay. Yeah, no, I get it. Yeah, I can see if we, reach that area and all that, but whatever. It's definitely on the table for sure. It's just I'm going to start with what I see and then we can go from there. What about the BTC halving? Everyone thinks that it will hit a new high after May. Well, BTC had a halving. I think it was in here. BTC had its halving somewhere in here, I believe. And it took, these are weeks, by the way. I don't know, 6 months. Took 6 more months for it to actually take off. So, the next halving is in, I don't know, what is it, March, April? So somewhere in this time zone, wherever price may be. Tack on another 6 months. You'd really be expecting that move to really get the move up here. So like, if we were just to draw this out, right, and I've drawn this out many times before. Let's just say like we do something like this and we do get that move up and then we come down and we get to here and we're in this zone and price already had its halving. I mean, why not? Something like this, right? This would kind of be what I would be looking at. Or, like what Bilbo was pointing out, maybe it's something like this, and then we come back down, and then we have the continuation. Either one, I'm very okay with either one. But the point is that I'm expecting the point that I am trying to get across, and man, if you look at videos that I put out, I'm talking like a year ago, straight up a year ago. No joke, like straight up 12 months at least. I had said there's going to come a point in time where price gets back up into this 30K area. And here's almost word for word what I said. Everybody's going to be very, very bullish. You're going to feel like you've missed the bull run. You're going to think to yourself, I should buy up here. I should be buying because we're going to go higher. You're going to think it's never going to end. All of crypto Twitter is going to be bullish. There'll be bullish things on the news. Everyone's going to be thinking new all-time highs. Uh, Whoever buys here is then exit liquidity. We are going to get this move back down, whether it's to 18K, maybe it's only to 25 or 23 or 20. Maybe it's just back to 20, right? And then we will get our move up, a year down the road from there. But I said it verbatim, I shit you not, 12 months ago, and many, many times since, not to be bullish here. Or if it's up here, don't be bullish here, because this is where things are going to turn around and we are going to have a significant move down before then having that massive continuation that everybody is looking for. If you look at this, we're talking way more macro stuff than I intended to today. But if you look at this move down, there's virtually no relief. Well, here's your relief. And that's all that it is, right? This is your relief. And then, we can have continuation to the upside. This is not, we aren't just, like similarly to here, we don't just go down and then all of a sudden come back up. No, we went down, came up for some relief, and then consolidated for a very, 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 very long time. Look at this consolidation here. Look at this. That's one, this is basically just one range here. It's even, let's, and we got to keep in mind too, these are weekly candles. This isn't even, look at that range, that you could trade for, from May to October, over a year. We were in this range for over a year, right? I do expect, something similar where we get that move down. We had our range deviation and we're essentially back in this sort of zone or this range, generally speaking, before then, having further continuation to the upside. So yeah, I hope that answers your guys' questions. I'm going to we'll kind of go back down to a lower time frame. So yeah, generally speaking, we're at resistance. We were failed to get a move above the value area high. We had a swing failure of the previous high here. We have bearish divergence on top of bearish divergence on top of bearish divergence on a 4-hour time frame. And, we can see here that we're having some degree of a rising wedge, a rejection here, a move down, a back test, short trigger, get the move down, target here first for the wedge, and then afterwards, if you want to leave a runner, to go ahead and target the 0.5 fib for a wave 2 retracement for then continuation to the upside. Right, this would generally speaking be what I would look at. And here's what's funny. We haven't even, how long have we been talking for? 46 minutes. So we haven't really even updated our charts yet. I would like to take a little bit of time to do that. I did want to get into ETH today. I don't think that is going to be a thing, unfortunately, because I really just want to give you guys a good thorough analysis for BTC for this very important week ahead. Okay, let's zoom in a little bit. Just look to see where some liquidity rests. Look at that, 23,800. Oh, guess what's at 23,800? Right where our 0.5 fib is and our fair value gap that I said could act as support. Yes, sir. I'm actually going to mark that on the chart. I haven't marked out some liquidity spots in a while. We'll go ahead and do that. So 23,800, and this would be a long liquidation. really think we need any of these anymore. I don't know where they are, but I doubt we need them. So we have one level there. Of course, we have liquidity above us, but this to me is sort of the key spot. What are we looking at? About 10 billion. Let's zoom in down to 7 days. Yep, 23 level. How awesome is that, right? We didn't even look at the liquidity, and we just did some analysis, and right where we talked about that 23,800 zone. Yes, sir. Cool. Let's go down to 12. Closest liquidity in the vicinity is 2750. If you're doing some scalping, 2750. Yeah, so that would break us down out of the range, which would be really nice. So let's take a look here. 2750. We would want this to be a little bit lower even. So breakdown. Back into this zone. For then continuation of the downside. Look to enter short positions here. Targeting here, and then of course our pocket down here. And we actually have a pocket of liquidity, surprise, surprise, at 26,300, which is also our 0.5, right? I think it was on our 7-day. Down to our 7-day. First one is, yep, 26,300. So that's a great spot. Let's look at our chart. This is very interesting. This is very, 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 very interesting stuff. 25, so 26, 26, 4. Yeah, so that's right around there. Got about 11 billion in positive delta in this time frame. There's obviously much more liquidity below our feet. Let's take a look at this range. A lot of longs still opening up here, which is great for shorts. You do want to see, so basically longs are the aggressors here because we're getting a move up. So you want to see these longs opening. See all these green dots here, all these longs opening with a lot of positive delta. That means that these are potential longs that can be trapped. So that's great. It's a great sign. I just want to zoom back out here. Biggest area for pain is about 25K, and then here at 24.4, we have some big pockets there. So 25 and 24.4. 24.4 is right here. Yeah. Okay. I do just want to take a brief look at this. Yeah, so my one kind of concern with this rally right now is that people really are shorting it. I mean, can see still some negative funding rates. Sure, we have a couple outliers. Bybit and Binance are basically neutral. There's a lot of shorts. Shorts are being pretty aggressive. And here's the deal. You don't really want to see that. You want to see more longs being aggressive, right? So I don't know. Maybe we do get one more move up. We'll have to play it by ear. For now, this looks good for continuation to the downside for now. I would expect, like I said, what we really want to look for is to lose the wedge. I like both of these trend lines here. Got a couple of them. This more local one, especially for a breakdown and a back test for then, a short entry and continuation to the upside. You can put your stop here, entry here, and then as a kicker, I would be willing to bet. If we go ahead and draw our fib, it'll also kind of be where the 618 is. So, having those few things in line would be really, really, really nice. And that's sort of what I would be looking for in the event for a short, right? Yeah, God, it's really tough to say. Just seeing like the funding rate, kind of. Today is Monday. Would we break down before the FOMC meeting? That's my question. We would have to. I would think we would have to. I don't think it's likely that we would continue to range in here until the FOMC meeting, which was right around this time frame. Price would have to slowly consolidate upwards till about, well, basically our weekly level. I'll mark that out on the chart. Weekly. Oh, it's already marked out. Is it different on here? No, it's still about that 29.9. Yeah, so we'd be consolidating up into here. I just don't see that being a thing. I personally don't think that that's going to happen. I think that price will chop, at the very least, chop outside of this. So maybe we'll do something like this. Come back up at the FOMC and then get a move down. But I don't think that we're going to continue to consolidate upwards. I just don't think it's likely, personally. So I would put your range trading cap on and maybe look for some degree of a sideways range. If we do, basically, listen, if we take out this high, then maybe I'll reevaluate. All right. If we take out this high, then maybe we do kind of grind up slowly or something like that. But in the meantime, when we're sort of at the, below the point of control here for this range here, as we're on bearish divergences, I would expect it to break down out of here, or simply, consolidate out of this wedge, and then, maybe get a liquidity grab to the upside or something, and then, eventually break back down, around the FOMC meeting. Let's just do, holy shit, I gotta clean up my chart. Let's do that now. I'm gonna go through this and we're gonna do some cleaning up. And then I'm gonna update my charts a little bit, and I'll try to keep this as quick as possible because I know we've already been going for quite a while. I just do want to look at some new levels here to see if maybe they can give us some insight. I don't know what the hell that is. Don't need that. Don't really need this anymore. That's not where it's supposed to be. It's interesting. Don't need that. Don't need that. Oh boy. Yeah, if that were to break down, this trend line is super, super key. Those are done. That is unimportant. Don't need this. This short did not play out with the NPOC. Don't need these. Don't. Not sure. Don't remember that. Oh, there's the NPOCs. That didn't play out. And then this is our... Holy shit, actually. I think I already have that drawn out. Let me look. Let's go to... Old range key. Huh. Look at that. I already got it. Okay. Don't need that. Don't need this. Don't need this. I'll keep that. And then this is all my scribbles. Okay, cool. I bet that that is a naked point of control. Hello, hello. 24,870. Perfect. I like that. That's a great, 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 great level to have. 24,870. Do we have a new weekly? Yes, we do. I'm not actually gonna give a shit about some of these. I don't care about that, and I don't care about that. New weekly level. That is 22,167. I don't think we're going to see that for a while. Okay. Daily. We have a couple dailies. No fucking way. All right, well, let's mark them out. I don't really expect this level to act as a very key support. I'll go ahead and hide that. I don't need that. Go down to a 4 hour. There's one more thing I want to add. What is it? Look at these dailies. FEGs. What does that line up for us on our wedge? Oh, okay. So we would. Oh. So that fair value gap could act as. Okay. So yeah, something I could totally see happening here is. Did I already write this too? No. I could see if we were to cut through here and then hold this as support and then come back up here and then come back down. I could see something like that happening. Eventually filling this gap though, right? Let's go back to our daily here. Oh. I don't think we're gonna go that low. Nothing. Yeah, we do have a decent OB here. I just don't think we're going to go that low. Let's take a look at our OBs quick. What is this? We have a weekly OB. Very interesting. Very happy that we... I'm not a crazy fan of that OB, but yeah, look at that. Lines up with our kind of our 30K-ish targets or so. Maybe give us a deviation. All right. Well, if I were to, like I said, if I were to look at this chart and I were to make some guesses, I would guess that price will drop and consolidate sideways out of this range going into the FOMC meeting. I think we'll kind of go like this, whatever, get some kind of an entry in here. FOMC meeting, actually, no, it would be, you know, get basically drop down out of here, grab some of that easy to grab liquidity range in here, whatever. FOMC meeting, maybe a move up like this, sweep the highs, and then eventually break down. I could totally see something like this happening. And it kind of sucks because, you know, you would just wish a wedge would be easy to trade and things would go smooth, but you know, they just never really seem to be that way. And if I were to make this as messed up and as complicated as I possibly could, and just overall hard to trade, grab liquidity here, early shorters here, get wrecked. We range for a long time, which people suck at dealing with. Maybe we don't even take the high. Maybe we simply, you know, maybe we do just break down and straight up consolidate sideways. FOMC come up like this, and then just, you know, break down. Again, people trying to trade this breakout, shorting here, they get wrecked. People get scrapped up on the sideways range. Shorters, again, get wrecked, move down. Longers get heavily wrecked. If I were to think of something really messed up and what could happen, this is probably what I would do. That said, we'll have to take it level by level, right? Nonetheless, I think that it's fair to, you know, target that 0.5 if you want to take some early profits. You could take profit at this daily level where we could have a possible bounce for support after taking out these lows. And, you know, essentially looking to trade some degree of a range. I would be very surprised if we just broke down, came up, and then just kept breaking down going into the FOMC meeting. I would be surprised by that personally. That said, I'm not really favoring longs here. Will I take a scalp long? Sure, but overall, I'm looking for some degree of a swing short lower. So that's, I would say in a nutshell, that's my analysis, guys. I'll go ahead and pull up. Let's pull up those areas of liquidity again. You know, here's two key areas of liquidity that are very close by. And we also have a small one at about 27K, right? So these are sort of your key areas that you would look for, maybe kind of a small, some degree of a bounce, a larger one from down here. But that's, you know, these are sort of my key areas that I would look for or probably take some profit in. Once we lose this value area, I would very much think that we'll start to break down, hopefully out of this wedge, and hit some of these lower targets, then maybe do that sideways consolidation. So I hope you guys enjoyed. Thanks for bearing with me. This was a really, really, really long stream. I was not expecting to go on for this long. So thank you guys again for joining me. Thanks for asking some questions today. It's always really nice to to interact and to give you guys some of my insight. If you guys ever do have questions, this is the best time to do it. It's a perfect time. We're having virtually a one-on-one, where I can take time to answer your very specific questions. So be careful with your longs if you are doing some long scalps. Look, if you are going to be entering some shorts, look for the entries, the triggers, right? Back tests, flags, things like that. Don't just, blindly start opening up shorts praying that it goes down. That's not a setup. That's not a strategy. That's just blind hope. I'm really, really, really excited for this week. I will be active in the Discord. I will be keeping you guys up to date on whatever is going on as I see it. Like I said, I am short. I've just been scalping in this range. Really, I haven't really taken any big trades that are significant or really worth going after. But I am short kind of from up here. I've already taken some profits. I plan on taking more profits. A little bit lower, and nothing crazy. Nothing to break the bank about. So enjoy the rest of your day, guys. And like I said, I will be in the Discord if you have questions, and I will do my best to keep you updated throughout the week. Enjoy the rest of your day, and we'll see you in the Discord.